I'm in San Francisco for REITwise 2011, NAREIT's Law, Accounting, and Finance Conference. Joining me is one of the session's lunch speakers, Alan Billingsley, Head of Research with REEF. So Alan, most signs point to positive news regarding the overall economic recovery. Are you buying a full recovery, or are there any cautionary signs you still see in the market?
I think that we have three significant headwinds that are keeping us from going into a very strong rebound. And the first being the consumer. The consumer is not back. The consumer is rebuilding his balance sheet. His 401k or retirement account is still, devastated. The home values are still down. So the consumer is not really back. Secondly, the home market. Okay, so again, related to the consumer, but also it really hasn't reached bottom. There's still more foreclosures ahead. Values haven't really bottomed nationally, and they're not going to be rebounding anytime really soon. And then thirdly, our fiscal government crisis, and that is already in 2010 manifested itself in quite a few layoffs in the public sector, probably somewhere in 250,000, 300,000 jobs lost that countered the private sector, stronger gains. Coming in this coming year, 2011, we expect to see quite a few more.
One area that does seem to have perhaps a tailwind at its back is fundamentals for commercial real estate. Most sectors are at least starting to see some progress there. What sectors do you look at as possible leaders of a rebound there, and which may be laggards?
Well, clearly apartments are the leaders, and we've all seen that. They really recovered strongly in 2010, 3-4% national rent growth, but in some markets, really quite strong. Coming up in 2011, this is really their year. They're really going to, as job growth kicks in, you're going to see very strong rent growth on into 2012, 2013. Very, very strong growth. I would say office is probably at the end of the queue, better in some markets than others, but in general, the office always lags in recovery.
In your REITwise presentation, you detailed a number of mega trends that will impact the commercial real estate market for the coming decade. Which one do you think could have the biggest positive impact?
Well, I think the demographic waves are really startling in this coming decade. So you've got two big ones. You've got the baby boomer, the biggest generation ever, and going into empty nesterhood, pre-retirement, and retirement. So that's a change, and I think that we don't know exactly how they're going to behave, but that's a big wave of people moving into the economy. I think the second one is the echo boomer. Anyway, they're kids, and they're moving into college, out of college, into their first jobs, and that's a huge event. Now, how does this impact real estate? And I think in a very positive way. Taking the more affluent, more educated, and more talented parts of those two demographics, I think we'll have an urban bias. So I think you'll see a bit of a movement from the suburbs to more urban environments. I think that's going to mean employers are going to prefer urban locations, well accessible, and more exciting locations that are going to appeal to these groups. I think you're going to find the echo boomers are going to want to live in those environments, at least in the more professional educated classes of that group are going to want to live in urban centers. So I think this is going to be very good for cities, very good for real estate in cities.
From a capital market standpoint, there seems to be a sense of relief that the worst is behind us as it comes to distressed assets, mortgage defaults. Do you think it might be a little too early to breathe a sigh of relief there?
There's still a lot of debt out there, and I think probably the most worrisome parts of that are the development deals that banks financed, and they're on their balance sheets. They don't really want to take the write-offs. That hasn't completely worked its way through. I mean, the FDIC's done its part by closing down a lot of those banks, and that processes those mortgages out onto the market. But there's still a lot out there, and it's not really clear how opportunity capital is going to view some of those deals. But I think now that banks are stronger, I think that maybe they'll feel more bold about getting some of those properties on the markets. The opportunity funds will be delighted to bid on those. So I'm not really alarmed about it, but it's something I think we really still have to watch.
Alan, thank you very much for joining us.
Thank you.
For more news and analysis, be sure to visit REIT.com.